Hello, everybody, and thank you very much for inviting me to contribute to this series of workshops. So, my name's Gareth Evans, and I'm co-director of a not-for-profit organisation called the Financial Inclusion here in the UK. And it's a real privilege to be able to share some of the reflections from the UK with you working across New South Wales. And so, although all our systems and institutions and policy settings are not going to be identical, what I'm hoping is that many of the issues that we're grappling with are going to be very, very similar. And so, across both the UK and Australia, we're seeing the effects of rising cost of living, persistent poverty, uh, financial problems, and exclusion from mainstream financial services. Which means that I want to use this session to share the UK perspective, but really I want to show that not the UK model should simply be cut and paste into the Australian context, but rather I hope that the examples and some of the things that we're going to discuss will help spark some ideas, strengthen some of that local conversation, and support the thinking about what is possible and practical when we're trying to build more financially resilient communities. And so, what I'd like to start by sharing is what I'm going to cover is some of the key challenges that we face in the UK around financial vulnerability and exclusion. I want to look at that landscape in the UK and what the ecosystem is. Particularly, I want to talk about the new national financial inclusion strategy that's just launched. And then finally, I want to turn to some innovation and look at how some of those challenges are going to be tackled by looking at technology, but just different ways of approaching the problem. Um, so just a way of sort of background. So the Financial Inclusion Centre, we're one of the leading independent not-for-profit research and consultancy organisations in the UK. And we work across a range of areas, including personal finance, financial exclusion, affordable credit, savings and debt, and local welfare support. And our work spans research, policy development, evaluation, and practical support to a variety of organisations to try to help them improve financial well-being and financial inclusion. We work with a whole range of clients, right from government and local government, right through to sort of social housing providers, financial services firms, and a range of charities and community organisations. And it's really important in terms of that mix because we can't be solving financial exclusion just through one sector alone. It sits across that whole intersection of poverty, financial markets, public services, community support, regulation, and technology. And so, despite the advances that we've had in financial services over recent years, and in particular around digital banking and more financial technology, more data, more personalization, and more convenient products, the system really is still not working for everybody. And in fact, for many people, financial services remains inaccessible, unaffordable, poorly designed, and simply irrelevant to the realities of their lives. And so what we're going to be looking at is if you're on a low income and dealing with issues around insecure work or carrying debt or lack of digital access or having some kind of accessibility issues, um, it's actually you find it really, really hard to navigate the systems and the products. And actually, the problem is the system is actually making the matters worse. So when we talk about financial inclusion, we're not just talking about a niche policy issue. We're talking about now something that affects millions of people and can really impact upon their social and their economic life. And so in the UK, an organisation called Fair for All Finance estimates that we have about 20.3 million people in financially vulnerable circumstances. And that is a huge proportion of the UK. And it's also a situation that's been shown to be dramatically deteriorating. So this research was done 2 years prior to this most recent version, and it's shown that this problem is exacerbating and it's grown by 16% in just those 2 years. And so it's not just confined to a small minority, it's really reaching into the mainstream society. And at the heart of this sits a fundamental issue that um, large proportions of society just don't earn enough money to be able to live and afford essentials. And so in the UK, one of the leading food bank providers, Trussell Trust, has done research that shows that about 14.1 million people in the UK struggle to afford those essentials like food and heating and are facing hunger and hardship. And it's a reminder that when we often talk about financial inclusion in terms of products and services, I mean, one of the biggest drivers of financial insecurity is poverty. And in the UK, this slide highlights some of the consequences of that, and problem debt is a massive challenge here in the UK. And some of the most recent estimates show that about 10 million people are classified as over indebted and should be accessing specialist debt advice to tackle some of that debt. But the problem is, and part of the challenge is that not enough people are accessing that support in a timely manner. And so about 77% have not accessed any kind of advice or support to tackle that problem. So another key challenge is there's a real lack of financial resilience within the UK. So about 40 million people have less than £100 in savings, and that includes 9 million with no savings whatsoever. And so this challenge means that where people don't have any kind of financial cushion, so even when there's a relatively small shock, that lack of a buffer means that setback can trigger a real crisis. So a broken washing machine or the need to travel or reduced hours or school costs, whatever it might be, that financial sort of setback means that without savings, those events can quickly become problem debts or real issues within the household. Another key challenge that we face is around lack of access to products and services. So even today, despite lots of effort, we still have about 1.3 million UK adults that lack access to a bank account. And when it comes to borrowing, we have about a third of UK adults struggling to access mainstream credit, which means that millions are relying on high cost subprime loans. And unfortunately, and much more worrying, is that many are being pushed towards illegal forms of lending. So many of those problems will sound very familiar in the New South Wales context. And so what I want to turn my attention to now is talk about the wider UK landscape and some of the interesting initiatives and some of the institutions that have been put in place to try and support this tackling of financial exclusion in the UK. So the first important part of that infrastructure is MAPS, or the Money and Pension Service. And in the UK, for some time now, levies have been placed upon the financial services industry and the pension industry to try and tackle some of these financial challenges and problems. And so that levy, those funds are being used to directly fund debt advice in England. It's now the biggest funder of free specialist debt advice, and it also supports money guidance and financial well-being activities through something called the Money Helper. And just to give you a flavour, in 2024-25, the Financial Services Levy provided £154 million for debt advice work and for money guidance and for pensions advice. So in the UK, the financial regulator, the Financial Conduct Authority, has a huge role to play and has been asked by government to have regard to reinforcing financial inclusion through the industry. And this builds upon something called the customer duty, which already requires firms to deliver good outcomes for customers, in particular those in vulnerable circumstances. And so it's really, really significant. And it means that financial inclusion is no longer just being framed as a voluntary extra or as a nice to have as part of sort of corporate social responsibility, but instead it's increasingly connected to mainstream regulatory expectations around product design, communication, customer outcomes, and fair treatment. So many of us would like to see that go one step further, and there's growing momentum behind something called the Fair Banking Act, which would require banks and other mainstream financial institutions to do much more for underserved communities. And it's based upon something in the US called the Community Reinvestment Act. And this obliges mainstream financial service providers to meet unmet need for affordable credit and more inclusive financial services, either directly providing that or through funding partnerships with community finance providers such as credit unions. And this could unlock about £3 billion a year in extra affordable credit going to individuals or into businesses. And another really, really important part of the UK picture is something called dormant assets. So these are funds that are sat for a number of years within UK bank accounts, not being utilised. And what the UK government has done is utilise those and put them to good use. And over since its start in 2019, about £277 million has been committed to tackling financial exclusion. And part of that has been the creation of Fair for All Finance. And this is an organisation that's been set up with three broad aims: to influence the system so that governments, regulators, and the industry prioritise financial inclusion. It's going to hopefully transform some of the markets by testing and delivering products that better work for excluded customers. And it's hopefully going to collaborate and invest in organizations and partnerships that can scale some of those benefits. And so this is significant because it's created a vehicle, dedicated institutions to really focus on that practical change within this space. And the final sort of piece of the jigsaw, and a really important new development that's taken place over the last few months, is that the government is driving this change through a new UK financial inclusion strategy that was published in November 2025. And it's significant because it's the first coordinated approach on this matter since 2004. So after more than 2 decades, it's really been elevated to a sort of national strategic priority, and it's designed to create a much more coordinated cross-sector approach to tackling the problem. And it's really explicitly linking this exclusion, not just to fairness, but also that it's an economic benefit and economic growth potential. So this is really, really important in framing the discussions. And the strategy is being developed and shaped by the creation of a new financial inclusion committee that had a broad representation from consumer groups and champions, industry representation, devolved government, but it also really listened to the lived experience of those that were experiencing some of those problems. And what it's come up with is a series of three cross-cutting themes. Firstly, around mental health, second around accessibility, and finally with economic abuse. And the policy itself is structured around six pillars. So the first being digital exclusion and access to banking services. The next one was around developing that sort of financial resilience through support for savings and accumulation of savings. The next one is around insurance and making sure that people have those safety nets to fall back on in emergencies. Access to credit has been a key plank of the strategy. Tackling that unmanageable debt and making sure that people get access to support earlier. And then finally, that sort of more preventative financial education and building financial capability. So it's trying to think across the full financial journey from access right through to resilience, right through to addressing some of those crises and prevention. So in terms of how the strategy is going to be delivered, um, what I want to just share is a couple of the sort of really practical measures that are outlined in the document. And so around banking, there's real efforts to try and reduce those barriers to people accessing bank accounts. And so there's going to be a no fixed address pilot that's going to try to reduce the issues around ID. There's also support for the implementation of about 350 banking hubs that bring together a number of banking institutions under one roof. On savings, there's a real focus on work-based payroll deduction saving schemes that really try and make and reduce the friction and create that sort of regular saving habits. Affordable credit is a real focus of the strategy, and it includes a £30 million credit union transformation fund to try and scale the sector, and also small sum lending pilot through the banks themselves. Around debt, there's a real focus on improving access to specialist debt advice and trying to really bring forward some of those referral routes and embed them into sort of declined credit journeys and other key sort of channels. Around education, it's going to make financial education compulsory within the primary school setting so that we try to sort of build that understanding and that sort of knowledge right from the early foundations. And delivery is going to intend to be cross-sector with implementation that's going to be reviewed 2 years after publication. And there's going to be a series of metrics to try and track the achievement of some of these goals and some of these indicators. So as you can see, there's a huge focus on financial inclusion. But what I want to turn my attention to now for the final sort of section is innovation and how we can use that to really unlock some of those opportunities. And a key point I want to sort of stress here is that actually, as you can see, because of the scale of some of the problem and some of the focus that we're giving this, it's not a niche activity. So serving those financially excluded people should not be seen just in the context of, I mean, trying to tackle a social problem, but it really is a major market opportunity, and it's been framed in that way. When we talk about innovation in this space, it's not just about that social good, although that is important given some of the scale of the problems that we've been talking about and some of the focus that's been placed upon this. But it's about trying to frame this challenge as an opportunity, as a way of better serving that huge underserved or unserved market. And some of the recent research is trying to sort of demonstrate that that impact that could be delivered. And so one of those is a recent study by Fair for All Finance. It showed that by tackling some of those outcomes from financial exclusion, such as poor productivity and some of those negative consequences, that actually it could unlock about £6.4 billion and add that to the UK economy every year. And specifically thinking about the credit market, again, a huge 2 billion unmet credit need could be commercially viably met through mainstream or community finance institutions. So it's a real powerful argument and framing of this discussion. But when we talk about innovation, one thing is that it doesn't need to be flashy and it doesn't need to be sort of, I mean, technology and innovation in that sense. Often it's about thinking about the products and services and how we could potentially reduce the friction and the barriers, how we can sort of really improve those referrals and the use of data to try and target and measure and benefit individuals and simplify access and try to embed that support into the various different journeys and solutions that people are already using, and really just trying to design it better for people who are usually left out. And that innovation can be incredibly powerful. So, how can innovation help? Well, it can help unlock opportunities by making those services cheaper to deliver. It can help make them more affordable and more accessible. And it can also create solutions that are tailored much more to those underserved groups or people, and using that technology and data to really own the product design and the product delivery. So it's really, really important that that best innovation in financial inclusion combines that technology with that real life understanding. And that's why I wanted to provide a couple of examples of practice and case studies that I've seen in the UK, and just try to sort of give you a flavour of some of the things that are happening in terms of tackling some of those challenges around inefficient incomes, lack of access, lack of resilience, and problem debt, and try and link those examples to, I mean, addressing practical barriers in the real world. So the first example I wanted to highlight around how we can try to tackle some of that insufficient income is a organization called Lightning Reach. And they've developed a portal that allows people facing financial crisis to identify and apply for support from a range of multiple providers through a single application journey. And it now works with about 75, 80 charities, councils, utility providers, and financial services organizations. And since it launched in 2020, it's now already helped about 200,000 individuals and families to identify £25 million in emergency support. And why is that really good? Because, well, one of the problems here is that there's just this myriad of hardship support out there. It's really fragmented, and asking people in those situations to navigate that and determine which is the most appropriate place and do they meet the criteria for that is really, really difficult. And that support is often scattered across different organizations, all have different processes, forms, and referral routes. And so that can be really exhausting and a problem. So what Lightning Reach really does well is use technology to sort of simplify that front door. And it's saving time for the users, also those charities, helping those organizations, I mean, have people that meet criteria and make better informed decisions on people's emergency help. We've heard the Lightning Reach example that's really trying to address that immediate crisis support that's needed to try and get funds to individuals. Um, but what the focus increasingly in terms of trying to address this lack of income is by income maximisation and basically taking some of the estimated £30 billion that goes unclaimed every year in the UK through welfare benefits, through various social tariffs and other sort of support, and trying to marry that with those low-income households that are entitled to those funds. And so, what a number of organisations such as Invest are trying to do is take technology to automate some of those checks and trying to really embed them in some of the sort of debt advice and money advice journeys, some of the financial service providers and loan applications, and then just some of the sort of council and social housing interactions that people have. And where that technology is being used, so where clients go through and try and check those entitlements, two-thirds find that they're missing out on an average of £4,000 in annual benefits and discounts that could be transformational for those households. And so there's a lot of work about sort of trying to map data to really proactively identify and engage those households that are entitled to some of those benefits. But also, as you can see here from the example of Lloyds Bank, which is, I think, the biggest bank in the UK, they've embedded that benefit calculator into their app and some of the other customer journeys. And it's helped 2.7 million customers already identify £50 million that is gone into their pockets. So really, really important innovation area because it's shifting that sort of signposting and trying to get the individual to complete something to actually proactively identifying that. So not waiting for people to know that they're missing out and then find the help, but making sure the system sort of nudges and identifies opportunities automatically. And it's much more efficient, much more preventative, and it's going to be much more longer term benefit to those individuals. So the next example I want to highlight is around this lack of access to financial services topic, and in particular, access to cash. So with the increasing drive towards a cashless society, many are being left behind, particularly those with digital exclusion or financial exclusion, as we heard, where they don't have a bank account, or in particular, where we're talking about people in financial crisis, where actually their account is going to be overdrawn. And so getting funds to those people is a real challenge. And so what I wanted to highlight is an innovation called Cash Perks. That's an award-winning payment solution that's trying to overcome those challenges in getting crisis payments to those vulnerable people in challenging circumstances. And so what it does, it adopts technology to really make it simple, secure, quick, and cost-effective for organizations like councils and housing associations and charities and other community organizations to get money to people via a text message. And what it allows is that individual to then instantly collect the cash that's been given to them from an ATM nationwide without the need for a bank card or a bank account or downloading any kind of mobile app. And so far, in the couple of years it's been going, it's already dispersed about £13 million in various different welfare and emergency schemes. And it's really just making it so much quicker and simpler to get those funds to an individual in need. And as we saw from the financial inclusion strategy, a big focus is going to be on increasing access to credit and affordable and responsible sources of credit. And There's a large proportion of community finance providers out there in the UK, and I want to highlight one called Salad Money that launched only in 2019 and has become one of the largest community development finance institutions, or CDFIs. And what you can see here is I wanted to highlight how it's using real-time open banking data to focus all its lending decisions on the actual income and expenditure rather than relying on historic credit scores, which a lot of lenders use. And why that's important is that in Salad's case, it's enabled them to really expand access to affordable credit and make lending decisions based upon affordability. So just in the most recent year, 2024-25, we provided 90,000 loans totaling £97 million, and it's estimated to have saved about £41 million in interest compared to subprime provision that those borrowers would have been able to access. So that's an average of about £454 per loan, which is huge amounts of money for low-income households. And this matters because traditional credit scores often exclude many people who, in fact, could repay affordable loans. Um, and so that's also sometimes missing risks that matter in real life. So around 10% of customers of Salad had no credit score at all, but performed similarly to those who did. And it also notes that traditional credit reference agency data can often miss certain identification risks, such as gambling, that open banking data can show. So it's a real important case study of showing how better use of data can really widen access, um, not by sort of lowering standards or lending irresponsibly, really by making better informed decisions that can be much fairer. The next example I'd like to highlight is around building financial resilience, and particularly amongst the lowest income households, and how we can try to automate saving and also access to loan repayments through something called automatic deduction mechanisms that are delivered either through payroll, so working with employers to allow staff to choose to make regular saving contributions or repay loans through their wage deductions before it hits their account, or very similarly with welfare benefit deductions. And again, the idea is trying to provide credit access and trying to encourage people to save really easily who might not otherwise. And this is through research that we actually did for both Fair for All Finance, but also the Money and Pension Service, that looked at this type of savings and borrowing through credit unions, so not-for-profit organizations. And the evidence is hugely encouraging. And so the idea is that the research showed that by really looking at the usage of this type of mechanism, it showed there was massive satisfaction levels, with more than 95% of credit union members who use this type of mechanism were really satisfied. And it was really effective in getting people who had never saved before or very rarely saved before to start accumulating regular savings, even if really small amounts. So about 7 in 10 members began saving more regularly because of this mechanism. And for the credit union as well, the benefits were there. So it was really the automated payments helped them to be able to lend to people it might not otherwise be able to through traditional methods. So it helped reduce arrears, defaults, and therefore servicing costs. And so the the benefit of this is it can be hugely scaled and delivered at mass, and really look to both scale access to affordable credit but also really importantly, build resilience by encouraging people to put away really easily savings that can make sure that they are less dependent and can better have safety nets there for those prices. And then the final example I just want to highlight is around tackling problem debt and how we can tailor the triage and support that we can give people who are declined for credit. And this is there's a lot of work going on in this field, but this is something that an organisation called Moneyline are taking forward. They're a CDFI, a not-for-profit, and traditionally, when somebody's declined for a loan, that's often the end of the journey. But for many people, that's actually the moment when they need support. And if we can embed support and tailored offers to people during that loan decline journey, trying to engage at that point of need and offering really personalized alternatives and encouraging people to take action, it can again be hugely transformational. And so the things that Moneyline have developed are things like automated income checks, support to reduce bills through social tariffs, and tailored budgeting help based upon the information they provided in the loan application. And they can really almost hand over with the approval of the individual, to advice agencies and other support. And so, I mean, each week they're supporting about 1,000 customers and identifying about £15,000 of support for those customers. So again, a real example of where using data and innovation can have a truly impactful, beneficial outcome for people in particular vulnerable circumstances where things like debt and other problems can be identified through a process, and then I mean, using that journey to ensure that access is taken up. So I really hope that's been a useful exercise outlining some of the UK context for financial exclusion. And hopefully, it's given some food for thought in terms of what you're talking about today and how you can translate some of that over to New South Wales. So, I just want to finally draw together a few reflections. So, as it will be in Australia, financial exclusion in the UK is widespread and deeply embedded and connected to poverty and insecurity. And what we're trying to do in terms of the policy and regulatory environment, and by utilizing the levies and regulations to try and tackle this in a really coordinated way, the new strategy that we've put in place is a really exciting opportunity to coordinate that action and try to deliver real impact on this challenge. And then finally, just that innovation and best practice can help solve this in a really practical way. It doesn't need to necessarily be innovative in terms of technology, but just a way of utilizing practical changes that can make it easier for people to access support, that it can design products and services in a way that meet people's real needs, that we can try and maximize income and get financial support to people in a way that, again, is sort of addresses their immediate needs and tries to scale access to affordable credit and build savings and connects people to help at the right moment. So enjoy the rest of the day, and thank you so much.